In this video, we are going to talk about how wealthy is China. So before starting this video, please like this video and subscribe to our channel for the future updates. China has beat the US to become the world's richest nation, according to a new report. Key findings: global net worth soared from $156 million in 2000 to $514 trillion in 2020, making the world wealthier than it was at any point in history. China accounted for nearly a third of the increase, the report from management consultancy firm McKinsey & Company stated. McKinsey analyzed the national balance sheets of 10 countries that represented 60% of the world's income. Of these nations, China accounted for 50% of the growth in net worth, followed by the US 22% and Japan 11%. The report found that China's wealth rose from $7 trillion in 2000 to $120 trillion in 2020. The US, on the other hand, saw its wealth more than double to $90 trillion in the same period. While the world is wealthier today, inequality still persists. In both China and the US alone, more than 67% of wealth is controlled by the richest 10% of households, and they continue to make more. The report found that 68% of the world's net worth lies in real estate. The remainder can be found in infrastructure, inventories, machinery and equipment, and intangibles such as intellectual property and patents, according to Bloomberg. With rising costs in real estate, China could suffer a financial crisis similar to the 2008 housing bubble burst in the US. Shenzhen-based property developer Evergrande, for instance, is already in hot water over debts totaling $300 billion, which reportedly forced its chairman to sell his personal assets, according to cable news network. A collapse of global asset prices could wipe out as much as 33% of the world's wealth, McKinsey noted. To avoid such a scenario, the report encouraged productive and sustainable investments that contribute to the global gross domestic product. A major new report from investment banking and wealth management giant Credit Suisse has found that the average Chinese adult is now wealthier than the average European. Although North America and Europe together account for 57% of total household wealth globally, China is squeezing out Europe in rankings of wealth per median adult. Credit Suisse's annual Global Wealth Report, which was released this month, estimates the average wealth of households around the world. It found that Chinese median wealth per adult, at $26,752, now outstrips Europe, where the average adult has a wealth of $26,690. The European figure takes into account the whole of the continent, which includes many less wealthy nations in its southern and eastern regions. China has experienced a historical pattern similar to that in the West, albeit later and more rapidly. For quite a long period in China, wealth was a luxury that was available to only a select few. Before the economic reform that began in 1978, China had a planned economy in which productivity was low, private property of any substantial value was prohibited, and necessities such as housing and food were collectively produced and then administratively distributed on egalitarian terms. Therefore, wealth was seldom a topic of public discourse before sustained rapid economic development was launched by the economic reform in 1978. The large amount of private wealth accumulated during the economic reform era, however, is now unequally distributed across the Chinese population. Thus, wealth inequality, in sharp contrast to the egalitarianism before the economic reform, has drawn intense attention from social scientists and lay people alike. Unfortunately, discussions about wealth inequality in China have hitherto been mostly ideologically laden or opinion-based, as scholarly knowledge about the subject matter is quite limited. Empirical research on this topic is much in need. Empirical research on wealth in China began in the 1990s. Using data from the China Household Income Project survey, which covered selected provinces, McKinsey 1993 examined wealth distribution in the rural areas since 1988 and found that wealth was relatively equally distributed in rural China, with a wealth Gini coefficient of 0.31. Scholarly attention to wealth has increased since the 2000s, the consensus being that wealth inequality has increased over time. Despite increasing interest in wealth distribution in China, however, few empirical studies on wealth using national data, especially compared with studies of income inequality, can be found in the literature because high-quality data on wealth are difficult to collect. In 2010, the China Family Panel Studies began collecting information about household wealth in China, laying the data foundation for this study. As a longitudinal nationwide survey, the China Family Panel Studies not only captures a cross-section of wealth holdings, but also facilitates research on wealth growth and wealth dynamics over time at the family level. In this paper, we analyzed the China Family Panel Studies data to achieve 4 research objectives on household wealth in contemporary China: understanding household wealth holdings and their components, assessing the level of inequality in household wealth, estimating major social determinants of household wealth, and investigating household wealth growth and wealth mobility between 2010 and 2012. While this paper overlaps substantially with an earlier report in Chinese Z in 2014, the results slightly differ, as we adopted the latest weights in the China Family Panel Studies data files. Data and measures. The China Family Panel Studies is an ongoing, nationally representative, longitudinal survey conducted by the Institute of Social Science Survey at Peking University. The 2010 China Family Panel Studies baseline survey interviewed 14,798 households and all their inhabitants. Using a multi-stage probability sampling procedure, we supplement the China Family Panel Studies data with data from the China Richest Hurun Report 2012, with appropriate weights applied to the China Family Panel Studies sample data of 2012 so that the combined data are at the population level. For the remaining analyses, detailed adjusted data are not available, and thus we use China Family Panel Studies sample data alone for further analyses. Still, we apply appropriate cross-sectional weights in analyzing wealth composition and socio-economic determinants. However, for the last section, which concerns wealth dynamics between 2010 and 2012, considering the complexity of longitudinal weights, we use resampled data to reverse the regional oversampling and represent the Chinese population without using weights Z and Lu 2015. The China Family Panel Studies dataset contains comprehensive measurements of assets, including housing assets, financial assets, agricultural machinery, business assets, detailed items of durable goods valuables included, and liabilities from housing and other sources. Land asset is a very important component of rural household wealth, but its value is difficult to estimate because there is no legal market for it in China. We follow the practice of McKinley and Griffin 1993. Who assume that 25% of the gross agricultural output value can be attributed to land, and that this flow can be converted into a stock value by assuming an 8% rate of return in estimating land assets. We also make imputations for missing values. For missing housing values, we multiply the amount of space in square meters by the average unit value for the same type of housing reported at the community level. For missing values from other sources, such as financial assets and durable goods, we impute missing data with values reported by the households in the same community, the family income of which is closest to that of the household with the missing value. Sijin and Z 2014 for detailed procedures. We measure total household assets or total household wealth, or net worth at the household level as the sum of land, housing, financial, and fixed assets for production and durable goods, minus housing and non-housing liabilities. Negative values are kept in all the subsequent analyses. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.